Hey, it's Michael Saul, but everybody calls me Tiny, and this video is And Higher We Go, plus 2 stocks to watch. This is stock market analysis for the week of October 2nd, 2017. Hope you had a great week last week, and if you would like to receive intra-week updates from me, go to www.attackthemarkets.com, put in your first name and best email address, and click the Join the List button. Then go to the email you used to sign up, look for an email from me with a link in it. You have to click that in order to confirm that it was actually you and not some evil, pesky bot that signed up to receive updates. Okay, so new highs, beautiful. And you can see how sloppy this chart is with all these lines. I really got to clean this up. But anyway, nice consolidation, and the S&P, boom, broke out to new highs. Now what we want to do is we want to see if we can pick anything up on the weekly chart. Now, I left the moving averages the same for the weekly chart. You can change them if you want. What you will find out the longer you do this is the more you can look at the charts without the moving averages, the better. I like having a couple of key ones on there. I used to load them up with 5. Now I'm down to 3. And a lot of times intraday I'm using none. But then even intraday, what I'll try to do is I'll try to throw something on like a 20 period exponential moving average on all the different time frames just to see what everybody else is looking at, because a lot of people look at the 20 EMA. Anyway, that being said, the red line is the 20 EMA, and this is the weekly chart. This is the 50-day simple. This is the 200-day simple. All nice, strong moves, but you don't need the moving averages to look at how strong we are acting here. So I am going to pause this for a second, come back. I'm going to throw a Fibonacci grid on here. Okay, so what I did is I took this little swing and I put the Fibonacci grid on it and then added some external retracements. You can see we closed above the 127.2. I know it's a little small, but so you may have to squint. And then above here is the 161.8. That, in my opinion, is the next target to the upside. It comes in at it's not really that far away at this point. It's 253.41. So I think we're going there at a minimum. You can do larger Fibonacci retracements or external looks if you want. But, this is over the course of a couple of weeks, because remember, this is a weekly chart, and it is into new high territory. Once again, you know, if you've been, well, you don't know because you may be new to my videos, but if you watch any of my older videos, I will be repeating the same thing I've said in all of them. It is not a place to sell, but it may not necessarily be a place to buy. What it is a place to do, if you are already positioned, is to trail your stops appropriately. If you're already long, it is time to trail your stops. Not all stocks are acting beautiful either, okay? I am not going to sit here and try to tell you this is it. We needed the new highs, and now we're going to sell off in October. Blah, blah, blah. Come on, it's ridiculous. The trend is your friend until the end when it bends. And so far, the trend is nice and strong. We're hitting new highs. Could a pullback happen here? Abso-freaking-lutely. As a matter of fact, I'm expecting a pullback to happen. I always do when new highs are hit, because it's a place where everybody who was long is now profitable, and it's a spot to take profits. Not everybody's going to take profits there, but some people will, or some people may say, hey, we're too high, I'm not going to be adding to positions or initiating new positions here. So I always look at new highs as a place to move stops, to even pair off profits if I'm fortunate enough to be in a nice, oh, look at this, I'm going to buy this pullback, heading into new highs, okay? That's what I look at. So I'm always looking for a pullback here. Doesn't mean I'm looking for a short signal. Doesn't mean I'm calling a top or the new bear market. It's nonsense. Right now, the bulls are completely in charge, as they have been. Now, the Nasdaq's lagging a little. The Nasdaq was out in front a couple of weeks ago. Now it's lagging. I'm looking for the Nasdaq to hit a new high. Here's the Dow. Dow hasn't broken out yet, but looking for the Dow to break too. I really don't care that much about the Dow, but you got to look at it. Here's the mid-caps on a test of their highs. So this is something that may say, hey, what are we going to do here? Maybe we'll get a pullback, consolidate, and then break through. And then, of course, you got the Russell, which had been lagging for months. I think maybe even over a year. Now they are out in front, chart-wise, a nice big push up here. Again, extended. I am looking for a pullback here. It would make the most sense to have a pullback or a consolidation here. And let me say something on that. I can't even help myself. I'm laughing so hard to myself. Just because it makes sense to have a pullback doesn't mean that's going to happen either. However, when we get extended like this, when we're up in the clouds, I am looking for a pullback pause before continued upward trajectory. That could oh wow, let me try to talk normal here. Before the trajectory to the upside continues. Does that make better sense? All right. Anyway, let's look at some of the sectors. Hey, I got it right that time. I didn't call them indices. So the semiconductors on the new highs here. Pull back to the 20 and a nice push up. Here's NVIDIA. Lagging a little bit, but again, not really a sell signal here. Intel, yeah, boy, Intel was looking kind of shady, and then boom, it just pushed up. But overall, it is in a consolidation pattern. It's in a wide range going back to July of 2016. And Clad Tanker, also with the nice pullback, right? We highlighted this a few weeks ago, looking for a move one way or the other. It broke out, and now it is headed up about 20%, a little bit less. Up about 18%, whatever. And it's on its way here. And look, you got this high up here, just shy of 110, that I'll be watching to see if that gets tested. How about the banks? The banks were looking crappy, and all of a sudden, they turned around. They're looking like they want to bust out, perhaps, of this range. Here's Bank of America, right? This is all just a big range starting from basically March. So see if it could coil up here under the roof, right? The roof of the range, and then see if it could break out. That's what I'm looking for. Citigroup already at new highs, been outperforming for a while. JP Morgan, similar. JP Morgan may want to consolidate up in the new territory. See, when you're looking at breakouts, and I've been working on a special report on how to trade breakouts for a while, so I'll, of course, make everybody aware of that once it's released, but real quick, what you want to see is you want to see consolidation either before the break or after the break. But you want to see what I like to call comfort in the new home. Okay, so you want to see price being comfortable. Okay, we broke out, now we're consolidating, and we're going to continue. Okay, now I'm not saying we're going to continue. I'm just saying we're at the consolidation point now, so now you want to see it continue. But it looks like JP Morgan can head to 100 here. Here's broker-dealers. If I could type the symbol correctly. Okay, broker-dealers at new highs. Monster. Goldman Sachs not at new highs, but acting okay. Morgan trying to get to new highs. You got like a leg Mason is lagging a bit here. How about Biotechs? So Biotechs are interesting because Biotechs we watched a few weeks ago in this consolidation. Instead, it's turned into a longer looking flag. Okay. And I'm apologizing if I'm a little scatterbrained here, but I'm on day 9 of the ketogenics diet, and I think the lack of carbs is causing me a little bit of challenging here with getting my words straight. But no, I don't know. That's a likely excuse, right? All right, so it's in a bull flag here. Biotechs look like they want to move higher. Let's look at a couple of Gilead could be in a 2-step pattern. Watch the 50-day moving average, and then you got BIB also down here at the 50-day. But the IBB, if you're looking for one way to play the Biotechs, it looks like a bull flag to me here. Here's Labu. Here's another way. Okay, whoop, I can spell it correctly. Labu's already taken off. This is a real nice one. All right, so let's look at some of the glamour stocks. You got Amazon. Remember I said that not all the stocks are looking great? I mean, yeah, Amazon's not a sell signal, but it's not in a strong buy position here. Okay, after Bezos was named the richest guy in the world for a couple hours, came back down here. Looks like it's in the spirit of a Head and Shoulders, but again, I'm not looking to short Amazon, but you got to watch it here because it's not exactly screaming a buy. Apple, same deal. Wedged up, rolled over. Again, tough to go against the most profitable company in the world, but right now it's not looking like it's on a buy signal. And of course, if we come back next week and, it ripped higher, see it was a buy signal, okay. But right now, it's not looking like that. Here's Alphabet. Now, Alphabet, We highlighted the consolidation last week. It did break out. See if it can continue and go back to the highs, but there was your buy signal there. And now, after it's been up for a few days, it's pretty easy to go to break even from here. If you choose, it's your money. You do whatever you want. I don't know if you even took the trade. Here's Netflix, just kind of hanging around. Here's Facebook, which loop-de-loop, right, came down sharply, then recovered it all, which is so great after everybody was saying, oh, that's the end. I read an article how Facebook has seen its best days. Yeah, I'm not ready to really count them out yet. They basically own media, so they own the media. I guess you could say there are other companies that are part of it, but I mean, Facebook, best way I've ever heard it described is it organizes the internet, which is really Google's job. But I think with Facebook, with the social aspect, I think it brings it up to a different level. Anyway, I don't care if you're pro or anti-Facebook. If you're looking at it as a stock perspective, something that you may want to trade or something like that, I do believe that Facebook will set up in another consolidation shortly, and then from there, see right now it's a little sloppy, and then from there it will make its next decision. I think it's going higher, but again, watch for the consolidation first, and then look what happens off of that. All right, Caterpillar. Yep, right up here. Consolidating up at the highs. John Deere, yeah, wow. Nice consolidation right above the 200. Popped up, came up above the 50-day, consolidated, popped up again. So I like to look at these every week because they're nice trading stocks. Right? They may not be the high glamour stocks like you're seeing in like a Tesla, right, or the other internet stocks that we just went over. But, yeah, I mean, Caterpillar and John Deere can move as well. So here's Tesla, popped up to a new high and sold it back down. This is another volatile issue on the short term at least. It may calm down to areas like this where it gets pretty low volatility, but then it can potentially break. Speaking of volatility, let's look at the VIX. So the VIX is down under 10 once again, not at the lowest level we've seen, which was back in July. But again, volatility is causing issues. I talked to a friend of mine who works for a hedge fund, and a lot of these short-term volatility index-based funds are getting cracked. Only 1 out of 10 out of the ones that are followed, some index I think is profitable for the year. So yeah, it's the low volatility is definitely hurting some people. Again, swing traders that just want to sit back, wait for the pullback buy, and think they're geniuses or just hold and just say, yeah, no, we're just going to keep going forever. Yeah, great. I mean, you're right. You're going to make money for at least for the time being that way. But if the market decides to get choppy, if the market decides to take a correction or pull back, which eventually will happen, I just don't know how many days, hours, weeks, or months are in it eventually. Let's look at oil. So oil got over the 200-day moving average. All right, I thought oil was going back to the September 2016. Oh, I'm sorry, the February 2016. Sorry about that, lows. But I was wrong, at least so far. You do have an A, B, C pattern here. And let's do the measurement. We could see where this could possibly stop. Boom, boom, boom. Okay, so if this ABC is going to continue and pan out, then the USO is going to 11. Here's gold. Yeah, so gold, which was looking good out of this Stein and handle pattern, now back below the 50-day moving average, back to its home base of this wide, sloppy range. GDX, yeah, my good friend Mike Swanson always says that people get interested in the GDX above 24. Now we're back below 24, so it may lose interest. Again, it's back to its home base where it consolidated for basically the entire year up to this point. And bonds. A lot of people calling for a bond rally. I'm calling for a bond, more of the same. And again, just shopping around here. Maybe it's set to roll over. Maybe this was all corrective and it's set to roll over. But right now, above the 200-day, below the 50-day, yeah, tough to call here. So I would wait for a better pattern to set up. So let's talk about Genex. So Genex was the stock that I talked about last week. Look at this move. Absolutely freaking awesome. Ka-chinga. Oh, you made a fortune on it, right? No! Because based on how I laid it out, and I will show you how I laid it out. You can watch last week's video if you would like. But based on how it was laid out, this was the pattern, and I was looking for us to take a break of this high in order for an entry. Well, guess what? Unless, let's see what happened. Hold on 1 second. I see I can't get this. There it is. So that's not actually that's more of a moving average. Hold on 1 second. I know I'm taking too long to show you this. The point I'm trying to make is there was no entry here. Okay, that's the moving average. It never crossed above the high of the candle that we were watching last week. So it's real easy for me to brag and sit here and go, oh, look at this, almost a triple. And no entry. They had positive data, and that's what happened. Look, there are plenty of places on the interweb where you can go. They can, tell you how they start with $100 and turned it into $1 million and all this other nonsense. But if you want a dose of reality, keep watching my videos and get on my email list, because that's what I bring to the table, is reality. And trading is not easy. It can be simple. Doesn't mean it's easy. And there's a lot of up and downs in a professional trader's career. And, I like to say sometimes you're the bug, sometimes you're the windshield, sometimes you have a beautiful, perfect, unbelievable setup. You get in, and then it craps the bed. Other times, you trade tired or sick, or, oh my goodness, or I think the FOMC is going to say this, so I'm going to go long, and you're right. That doesn't mean that you're a good trader. It just means that you happen to get lucky. Okay, so again, don't buy into the hype. All these penny stock gurus that seem to be, it's a disease out there. They come out, they tell you how, I started my account with 10 grand, now I have 250,000. Yeah, because they're pump and dumping you. They're front running you, and then when you get in there, they're selling into you. Again, I don't like to sit here and talk about other people. It's really unprofessional and it's not cool. But just understand what you're looking at when you get into these various services and try to follow these quote-unquote super gurus. Okay, so Genex looks beautiful. Would love to take credit, but just can't. All right, 2 stocks for this week. This is a nice momentum mover. It's Rada Electronic Industries Limited. I'm probably butchering the name. Maybe it's Rada. I don't know. Whatever it is. It's RADA. It's an aerospace and defense stock. Nice gap up to get this going. I was just really dead here. This is exactly how stocks can come alive, right? Nice gap. Pulled up, pull back, pulled up, pull back, pulled up, pull back. Let's see where this can go. We throw up a weekly chart and we see we have some potential problems up in the 470s area. And if it can get through that, you're looking at the mid-6s. All right, so yeah, even a move from here to the 470s is a nice percentage move. That's a nice point move too, $1.30. Okay, the second stock is AVEO, AVEO Pharmaceuticals. Hope that's how you pronounce it, because butchering a lot of these names. But look at this beautiful pattern here. Again, check for news, check for earnings, etc. But again, a nice start here, consolidation, push up, pull back, push up. Now it's consolidating, looking for its next move. Whether that is up or down remains to be seen. Have some issues here. You have the middle of this, which comes in about in the 5 range, called 505, and then you have this resistance, which is former support at 582. But again, this could be a nice mover here. So AVEO. Again, to recap what I think is going on here, I think we're going to the 161.8% Fibonacci, which is, I should have written it out so I don't have to do this again, which is 253.40 area, something like that. And I'm also on the watch for a potential pullback because we are at new highs. The Russell is extended, the mid caps are extended, etc. Like this video if you like my ramblings today. I went a little bit overboard. I've been up since 7 o'clock this morning, reading Barron's, going through everything, getting my opinion set. And really, nothing has changed since last week. Right? I think we're going to go higher, but I also think we really need to watch out for a potential pullback. Questions? Tiny@attackthemarkets.com. Don't forget, sign up for the email list to get intra-week updates. Have a great week. I'll talk to you via email or in next week's video.